Hello and welcome. You're watching Markets Today. I'm Sakshi Patra, and this is where we discuss everything about the closing action of the markets today, how the day panned out in trade, as well as what were the gains and losses seen, the stocks and sectors that were in focus, and also what can you really expect as we move forward to the weekly expiry of FNO in tomorrow's trading session as well, and what should be your trading and investment strategy. Well, all of that will be coming up over the next 4 to 5 minutes, so do stay tuned on to with me. First up, while the markets shut shop for the third day in a row in the red zone, in the negative zone, we have seen that the energy stocks, the oil and gas stocks, those were under pressure today. Commodities have been dragging, and that's been the sentiment through the session today. A very volatile move. We opened lower and we consistently, slipped in trade. We also saw the Sensex and the Nifty really dragging the street today. The Sensex dropping 372 points in trade. Also, the Nifty giving, slipping below the 16,000 mark as well. So that was the kind of move that we actually saw on the Nifty in today's trading session. 15,966, 0.5% lower is what you saw the markets really ending at. So we had opened up in the green zone, but we could not sustain those levels. Towards the end of the session, we've actually slipped into the red. Remember, in the morning session, we had seen all the sectors were trading in the green. The Nifty Bank was in the green. The mid and the small caps were in the green. And towards the end of the session, we've actually seen all of that dragging the street. The market breadth was fairly in favor of the bulls in the morning. Towards the end of the session, we've seen a divided action right there. So 22 of the 50 stocks have actually declined and closed today. 27 stocks have ended in the green zone. When you talk about the India wicks, remember there was a fall of 1.5% in the morning trade, but right now we actually saw all of those losses also getting recouped right there. So the volatility moved higher. The Nifty Bank was the culprit here. 0.9% of a drag is what you saw, 34,827 at the closing levels. The private banks really dragging the sentiments today, 1% of a fall right there. Financial services seeing a 1% fall. The IT index dropping because of the disappointing earnings right there, 0.5% lower. The auto stocks also slowly moved into the slower lane. The pharma index, however, inched higher, 1.4% today, 0.5% increase for the metals, for the PSU banks, and for the FMCG index also a 1% move on the upside was actually seen. On the Nifty gaining front, you had stocks like JSW Steel rising 2.5%, defying the street sentiments on the metal side. Divis Laboratories up by 2.5%, Hindustan Unilever up by 2%, Cipla, Asian Paints all up 1.5%. On the downside, IndusInd Bank dragged the sentiments today over a 3% cut. Bharti Airtel, HDFC Twins over 2.5% lower, and Reliance Industries also slipped below the 2400 mark and down about almost 2%. 2375 is where you actually saw the Reliance Industries stock closing at in today's trading session. I've already spoken to you about the sectors that actually saw the move today. We did see the Sensex falling 372 points to close the day at 53,514. And this was for the third day in a row that we actually saw the Sensex closing in the red. Apart from this, if you see, there were other highlights also that you must know. So towards the end, we actually were close to the low point of the day. Also, the Nifty declined by a significant magnitude and slipping below 16,000 for the first time in a week's time. Today, 27 of the Nifty stocks rose, while 22 stocks declined on the Nifty in today's trading session. The broader indices, however, outperformed the larger peers, with the mid cap index gaining 0.3%, small cap index measured a little change. 12 of the 19 sectoral indices compiled by the Bombay Stock Exchange declined, with power utilities really losing by 1.7%. On the flip side, healthcare and FMCG really stemmed the losses in today's trading session. The market breadth was skewed neither in favor of bulls or bears. About 1686 stocks overall in the markets rose, while 1638 stocks declined. So it was almost an equal tug of war that you actually saw in the markets towards the end of the session as well. The rupee again closed at a new low of 79.68, and we actually saw the rupee trimming some losses during the session, but fresh record closing low again for the rupee today. Of course, we did see some of the other important factors that were important to track. Say, for example, the highlight was that HCL Technologies reacted right after its Q1 earnings. The earnings were disappointing, and therefore the stock fell 2.3% after missing the margin estimates of the street. Of course, apart from that, the markets also also reacted to the macro data. So the CPI inflation remained above the 7% mark, well above the comfort zone of the RBI. That fueled, again, anticipation that the RBI may continue to raise rates even going forward from here. The bond yields edged lower, tracking the CPI data as well. Bajaj Healthcare stock rose about 3% as the firm is now going to be entering opiate processing business. Also, paint stocks were back in demand as the crude oil prices slipped below the $100 a barrel mark. However, Nomura has slashed now India's 2023 GDP forecast to 4.7%. We also saw some commodities, slipping away. Like palm has tumbled 6% on a weak outlook for exports. China lockdown fears as well. Mindtree Q1 results have come in, but they've actually come in post the results, post the market hours today. So the profit after tax is at 472 crore rupees, and that's the kind of big highlight that we're just getting from the Mindtree numbers, and the markets will be reacting on Mindtree tomorrow. Apart from this, of course, experts do believe that macro numbers will be important to track. The CPI, the WPI, the US CPI numbers, the retail inflation numbers of US inflation will be very, very important to track. There are anticipations of fresh highs of 8.8% kind of inflation to be touched, owing to the surge in gasoline prices and the food costs as well. If that happens, the market could actually be in for another day of losses. So keep that in mind. Most of the experts are saying that the stock markets will be very, very stock specific in the next few days. They will be reacting to the earnings, specific numbers coming about, punishing those where the numbers are not good, and rewarding those stocks where the earnings are coming in line with expectations or better than expectations as well. So, for all those investors looking for long term play, very, very stock specific approach is important for you. For the traders, very cautious approach to the markets right now. So that's as far as the market wrap of the day is concerned. We'll keep you posted with everything that's buzzing on the D Street. So don't forget to stay tuned onto Business Today TV for a whole lot more that's coming up right up next for you.